members of the committee. Madam Chair, long time no see. Hope that you all have been doing well. It is great to see everyone in this crossover world virtually. I guess this is my first crossover virtual hearing, so we'll see how it goes. We'll roll the dice with it. So look, I want to thank you all. This is a bill that you all know well. This probably does not need too much of an introduction. I do want to thank Majority Leader Lutke for cross-filing this and working on some of these complicated issues to make sure that we get this right, because it's a really important initiative. So Senate Bill 787 deals with the digital ad tax and corrects some misunderstandings, oversights, depends on someone's perspective, from HB 732 last year that was overridden this past month to clarify that news entities and media organizations are not affected by the digital ad tax. And of course, this is important because of First Amendment concerns, and we want to make sure that our local news media and the power of the press are, we did not believe that they were incorporated in the first go around of this particular bill, but to clarify with belt and suspenders, we wanted to make sure, and so that's what the derivation of this bill was on the front end. We also wanted to add protections for Maryland small businesses. While on the front end, we don't believe that these platforms have the ability that, you know, the 6 million Marylanders, I don't know, are going to impact the multi-billion-dollar ad market that a number of these platforms use. Just to make sure, we wanted to clarify that the platforms that may be assessed through this particular revenue system cannot pass that cost along through a separate fee, a surcharge, or a line item. This is to make sure that we are not trying to profit off the back of Maryland small businesses who have been, in many cases, have their own private data utilized for free with a free rider system that has been developed through digital ads in this new economy. Finally, the Budget and Taxation Committee amended this bill a bit more, and I'm not sure exactly if the committee has taken up some of these technical fixes that made the bill an emergency, but also changed some of the dates due to the veto and override on the digital ad tax as well as the tobacco tax. And these were recommendations from the Comptroller's Attorney General, the Attorney General in the Comptroller's office. So while some of the amendments may look more complicated, they are really truly affecting effective dates and removing any extraneous language such as funds going to COVID-19 relief efforts without making real significant policy changes. But fundamentally, at the end of the day, this bill is a kind of belt and suspenders approach to ensuring that these multi-billion-dollar, multi-global companies who have been able to grow, which is wonderful, don't continue to exploit the free use of personal data and contribute into the system and pay their fair share so that Marylanders are not overburdened. With that, Madam Chair, look forward to the committee's favorable report of the bill as amended.
Thank you, Mr. President. We do have one question so far. Delegate Buckle.
Thank you, Madam Chair, and it's good to see you, Mr. President.
Likewise.
A question about the exemptions for what we're defining as broadcast television ads. You pointed out, you know, there's some First Amendment concerns about hindering or encumbering free speech expression, and we all understand. I know you went to law school. I did too. There's a difference between political speech versus commercial speech and the levels of protection that the court affords. But what's the difference, or what's the definition in the bill as constructed for what's a broadcast television advertisement, which would be exempted from having this sales tax applied, and a non-broadcast television ad, if that makes sense? I mean, is there a definition that is in the bill or something we can understand?
So the terms are defined, but I think it's really important, and I want to clarify that the First Amendment concerns, I mean, there is plenty of jurisprudence to make it clear that an assessment or any sort of tax on a news entity is not an infringement in any way on the right to the freedom of the press. So news entities as corporations are subject to the same revenue structures as any other company, organization, whatever it may be. On the front end of this, the target of the revenue is around the platforms themselves, and they have to make $100 million or more on digital advertising. That is the threshold, and have to make $1 million here in the state of Maryland. So this is an apportionment question. And so it is limiting the scope. So the real definitional issue is who qualifies for the $100 million of global digital ad revenue and the $1 million raised here in the state of Maryland. Because of course we are only focused on the revenue that is raised off of the backs of the free data provided by Marylanders who are using or the viewers of these digital ads in the state. So it's the definition matters as to who it's applied to, and that's the more relevant one. This clarifies that local broadcasts and local news entities are not subject to it. Okay, and we worked on this particular language with the Press Association to make sure that it was clear that these were about bona fide news entities.
So if I can just follow briefly, so is broadcast different than cable or satellite? And maybe I'm thinking about it the wrong way. I just think of how I watch TV. I think a broadcast channel, WBAL live from Baltimore, and I pick it up on just a local system, or I pick it up through the UHF, or I pick it up through a digital device. Maybe that's my broadcast channel. But if I subscribe to a cable service, or personally, I subscribe to a satellite service. So I get all my TV in Western Maryland through a satellite program. Will those entities still be subject to the tax, or how will that work to assess them if they meet these financial thresholds?
So certainly there was a request to remove all broad cable, satellite, and that was not necessarily the intent. The intent was around news, was around the local broadcast of news and information. And so, certainly I imagine that the committee will debate this. We in the Senate did not believe that was an appropriate exemption for this particular. These are large, multifaceted digital companies. And so we did not move on the amendments that were requested by these larger cable companies, cable satellite companies. Certainly the wisdom of the committee in the House may have a different approach, but we thought that it was best to limit it specifically to these news broadcast entities.
Fair enough. And thank you for your explanation. I appreciate it.
Certainly. Thank you.
All right. Thank you. Any other questions on this legislation? All right. Thank you very much, Mr. President.
Thank you all. Stay safe.
Have a good day. We'll next move to Senator Eckert with House Bills 92 and 102. Senator, I'm not sure if if you want to combine these and tell us, how they're sure. A little different, because I know they're mostly trying to do the same thing, and you got one of your delegates to introduce each of the similar initiatives. So please go ahead.
Sure. Thank you very much, Madam Chair, Vice Chair, and members of the Ways and Means Committee. I'm glad to be here today to present these to you. And yes, I deliberately kept them straight because we had a number of issues being worked out with the physician assistants and the Board of Physicians, and the issues having to do with the previous group, and the nurse practitioners were the ones that were asking for the technical changes regarding the number of hours eligibility. And then it's been in effect for 5 years. So we wanted to remove the sunset. So I put them in separately, and but it's fine to combine them. We actually had two different approaches in the beginning, but it seemed to keep getting mixed up. That's why we separated it until we could get it through and make sure that everybody understood that this is a special breed of cat, as you well know. Folks cannot participate in this tax credit unless you bring your money to the table. And that was part of the issue getting clarified, because the nurse practitioners had already made this commitment to their $15 assessment. And then we had to get that straight with the physician's assistant and get it cleared through the Board of Physicians, since their funds run through their bank account, so to speak. So as long as we have satisfied the rotation to be 100 hours for eligibility, that will be important. And I just need to make sure that those bills that you've put them both together in, that bill contains all the provisions that were included in both Senate Bill 92 and 102. So with that, thank you for your participation in this. We've had other disciplines want to come to the table and participate, and we've told them you need to bring your money to play. So that's a bill for another year, but if you would move this favorably, we'd appreciate that. I know there's some concern with the tax provision in the stimulus money that's coming, or the relief monies that is coming regarding taxation. And I hope, since we passed this earlier, that is not impacted with that provision. So I would move favorably on the combined bill, but make sure you have the 100 hours in there.
All right, thank you, Senator. Any questions for Senator Eckert? All right, thank you, Senator. We'll go next. We're done with the hearings on both 92 and Senate Bill 102. Go to Senator Gallion on Senate Bill 294.
Thank you, Madam Chair. Hello, committee members. Senator Jason Gallion here for the record to introduce Senate Bill 294, Cecil County Sales and Use Tax Exemption, Federal Facilities Redevelopment Areas. Otherwise known, this is a Bainbridge bill. This bill is cross-filed with House Bill 582, which is sponsored by the Cecil County delegation and was presented by Delegate Hornberger back in February in your committee. The one change, there's one technical amendment in the Senate version of the bill that narrows the scope to make sure it's targeting the specific project. The bill passed unanimously in the Senate. I respectfully ask for your favorable vote and happy to take any questions.
Thank you, Senator. Any questions for Senator Gallion? All right, thank you, Senator. Seeing no questions, we'll move on to the next bill on our list. We have Senate Bill 480 from Senator Zucker.
Thank you very much, Madam Chair. I don't know if you were disappointed to see my name when I logged in under Jenny, my wife Jenny's Zoom account. I thought it would make you happier, but Senator Craig Zucker here on Senate Bill 480, which is almost a direct cross file to Delegate Sandy Rosenberg's bill that passed unanimously out of Ways and Means. There's a few differences. One, there's a change of funding source. Delegate Lukey, my teammate and good friend, and I agree that the funding source is fine. It also changes who administers it under the House bill. That's also fine. I do, as you all know, the tax clinic just provides tax help for state taxes. And then there's the difference of funding. The House made it 100,000. The Senate is at 250. I hope that the House will agree with the Senate posture of 250,000, and that the tax clinics each get a third. Other than that, Madam Chair, you all are very familiar with the bill. Appreciate your time, and it's always great seeing you, Madam Chair.
And of course, and next time send Jenny, who I used to work with. Any questions for Senator Zucker? All right, thank you, Senator. Next, we have Senator Simon Ayer, Senate Minority Leader, Senate Bill 510. Thank you.
Thank you, Madam Chair. It's a pleasure to be here. This is a simple bill, had no opposition, and it basically allows those who make clothes the same benefit as those who buy clothes during the back-to-school tax-free week. My family, including a former delegate of yours, Megan Simon Ayer, that benefited from this program. I think it's a wonderful program. What it does allow tax-free for would be clothing material, thread, and things like that. It would not include sewing machines or other tools. I think this was a great idea, but I will say I will not benefit from this. I don't know how to sew, and even if I did, I don't think the kids would wear what I sewed. But my constituent came up with this idea. I think it's a great idea. And if you could just give her, I know she's on here, if you could give her just 60 seconds to tell her why this is a great idea, I'd really appreciate it.
Sure, go ahead.
Hi, thank you for the time and opportunity to speak with you guys. I reached out to Senator Simon Ayer about this because it's always kind of surprised me that the fabric and other materials that are actually used to make clothes, which are tax-free, are not included. I was fortunate enough to have the opportunity to spend weekends with my grandmother as a kid growing up, and she taught me how to sew. And it's something that I still do to maintain my connection to her, even though she's not here anymore. And now I have a daughter of my own and another daughter on the way in the fall. And I look forward to being able to sew them clothes and even do matching outfits and be super quirky about it. But I do support this bill, and I hope that you guys will add sewing supplies to the tax-free items.
And
Thank
she's
you.
very humble. She's a PhD economist, and she doesn't have much time to do, but when she does, she likes to do it.
Yes. So I work for NOAA. So.
Great. All right, thank you both. Any questions for the senator? All right, thank you, Senator Simon-Ayer.
Thank you.
We'll move on to the next three bills that we have from the, that are all departmental bills. And we have, I believe, Secretary Kelly Schultz here. Good afternoon, Secretary Schultz.
Well, good afternoon, Madam Chair, Mr. Vice Chair, which I haven't seen him yet, but of course, all the members of the committee. For the record, I'm Kelly Schultz, Secretary of the Maryland Department of Commerce, and I'm testifying in support of Senate Bill 19. You have our written testimony and also letters of support that were included earlier today. I am joined today by Lonnie Sinfield, who is here to assist as needed with any technical questions about the operations of the program. Senate Bill 19 makes several changes to our Biotechnology Investment Incentive Tax Credit, or we call it BITSI for short, that we believe will improve the program by making it more accessible to early stage companies, allowing it to leverage more private sector funds and establishing a clear policy goal for the tax credit. BITSI was created in 2005 to attract private investment to Maryland's growing life sciences and biotechnology sector. As currently written, the program has Commerce certified qualified Maryland biotechnology companies, then allows investors in those companies to claim a tax credit of up to 50% of their investment or up to 75% of their investment if the company is located in Allegheny, Dorchester, Garrett, or Somerset counties. This has been a very successful program, attracting more than $250 million in private investment from fiscal year 2007, the first year that it was received an allocation through this past fiscal year in 20. The annual appropriation for this program has increased 4 times, taking it from $6 million to $12 million currently. Commerce recently analyzed the first 12 years of data for this program and found that a handful of companies excel at getting their applications in each year, allowing them to claim a disproportionate amount of the credit. We believe the modest changes called for in Senate Bill 19 will allow Commerce to better meet the demand for this program and allow more companies to take advantage of the credit. This bill will reduce the percent of investment eligible for the credit from 50% to 33%, or from 75% to 50% for companies in those 4 set-aside counties, Allegheny, Dorchester, Garrett, and Somerset. This brings the incentive more in par with what is offered in other states. Maryland currently offers one, if not the most generous, of the other similar investment incentive programs. It also lowers the percentage of the total annual appropriation that a single company can claim from 15% to 10%. It establishes a lifetime participation cap of $7 million for companies that benefit from the credit. And it defines eligible companies as those who have been in business no longer than 12 years. And finally, it establishes a clear policy goal for the program, which is, in short, to foster the growth of our biotechnology industry by incentivizing investment in early stage companies and increasing the number of companies, the number of investments, and the number of individual investors in Maryland's life science industry. Senate Bill 19 will make this program much more effective, will provide support to a broader number of Maryland companies, and will help Commerce strengthen our biotechnology and life sciences sector. But before I take questions, I do want to note that the bill was amended by the Senate, and we are comfortable with this amendment. The amendment clarifies our intent that the $7 million per company cap means a company cannot continue to participate in the program when all of its qualified investors have received more than $7 million total. With that, Madam Chair, we respectfully request a favorable report, and of course, always happy to answer any additional questions.
Thank you, Madam Secretary. We'll start with Delegate Buckle.
Thank you. Good afternoon, Madam Secretary. I appreciate you being here on the bill. I get it, and I'm really, I think, a big supporter of the intent to try to broaden out the applicant base and get more people involved and invested in the program. I have a little bit of heartburn because just a few years ago, we were able to put in sort of the bonus credit, the higher credit for Allegheny Garrett and the two counties on the Eastern Shore that really have had a very difficult time ever getting the technology industry that's so important to the I-95 corridor counties and has fueled their growth. And we've kind of been left out of that. That's why we put that in there. And we've had some small successes, not anything big yet that I'm aware of at least, but we've had some small successes. Is that an integral part of the bill from Commerce's perspective, is reducing the credit amounts? I know you've done it mathematically to kind of keep the percentages the same. The 4 rural counties had a slightly higher percentage than the average base credit. Is that an integral part of the bill from Commerce's perspective, or was that just something done to kind of make the math look better?
Well, I think it has more to do with opening up to some of the smaller investors and investment companies than it has to do with geography, quite frankly, Delegate Buckle. And the reason why, and the whole intent of this bill was because there are investors that are out there and there are companies out there that are not able currently to participate, whether it be in the 4 counties that you had mentioned or even in those companies across the state. And in the analysis, and by the way, I'll turn it over to Ms. Sinfield in a moment, and she can give a very technical reason for that for you. But I think it's important that this is one of the questions from this particular statute in the programs that we have at Commerce that has been in question for many years. And we gave, actually, the chair of this committee our word last year after we had discussion about all of our tax credits and what we could do to make them more equitable for smaller types of companies and startups that are coming into the state. And the disproportionate amount that was going to larger investors and larger companies, we wanted to find a way to make that work better for all. But I can certainly have the program director respond more specifically if that is what you prefer.
I mean, that's fair. And I support that, to try to get broader and newer businesses and entrepreneurial businesses as opposed to just the big boys, so to speak, involved. I just want to always keep that at the forefront when we discuss some of these credit programs. There are a lot of counties in Maryland, and I'm very, very happy for them as a Marylander, that are already attractive to these types of businesses because of latent advantages, proximity to FDA, NIH, healthcare network, things of that nature. I just want to make sure that we never lose sight of spreading the wealth. We're a small state. It really doesn't take very far to drive all the way across the state. And I want to make sure that we spread the wealth so we really have that one Maryland economy in biotechnology, in all technologies, in cybersecurity. I know the bill's coming up. And so that was my only concern, but I think you explained it well. Thank you very much.
I understand that, Delegate. And one more thing, I just want to make sure that I'm sure you've read all of it quite intently, but we have reduced the percentage in those 4 counties as well. So we didn't just reduce the counties or the percentages from the overall state.
Right.
We did reduce it for the counties so that there still would be a competitive edge that was there.
Yeah, I think that's fair. Thank you.
Sure.
Thank you. And Delegate Schultz, in your answer, when I present my bill to BNT later about the tax credit evaluation, I'm talking about the partnership we all have now with making a lot of these changes. So thank you. Delegate Palakovich-Carr has a question.
Thank you, Madam Chair. Secretary Schultz, thank you personally for being here to explain this and the other bills. And I do appreciate that Commerce has proactively put forward some of these reform bills. I had a couple of questions on this one that relate back to the 2018 review that DLS did of the biotech tax credit. And one of their recommendations was to get rid of the first come, first serve awarding process for this credit. And in fact, last year, this committee in the House passed a bill that Chair Kaiser sponsored that would have required reporting language, in particular on this tax credit for Commerce to see if there was another way forward to have a more competitive award process. I'm wondering if that's something that Commerce has had, actually looked into perhaps over the interim, even though that bill didn't make it across the finish line, unfortunately. But clearly the intent from the House was out there. And I'm hoping that perhaps there is another way forward so this can be a more competitive award. Thank you.
Right. So thank you for that, Delegate. And I will say that the amount of research and analysis of all of the programs that we're presenting today has been ongoing for 2 years. Since the first session that I was here representing the Department of Commerce, the team has dug into it from every level. And obviously, we want it to be competitive. We want that to occur. There has been some concern about first in, first out, first come, first serve, however we look at that. And I'm not going to say that we're at the end of looking at how to work through some of the equitable types of initiatives that we have for each of these. But I will say that programmatically, and perhaps this is where Lonnie can give you some programmatic detail about that might be very helpful. We understand that there's always room for improvement, but this competitiveness will deter those, like I said in my statement, those that are very, very capable of having their accountants get the information in as soon as the applications go up. They will no longer, after a period of time, be able to apply. So over a period of time, it will be the smaller, less nimble companies in order to do that. And Lonnie can respond further, Delegate, if that is helpful for you.
Hi, Secretary Schultz. Hi, Delegate. A couple things that I did want to add is that the agency has thought long and hard about the changes that it should make to this program. The difficulty with instituting something like a award on a competitive basis is that Commerce would be selecting the winners and losers with the biotech companies. And we would prefer that that is actually done through on the investment side, right? That the private investors are the ones choosing which companies that they're investing in. It's of course very difficult, and it's possibly over the long run we could do more study about a different method than first come first serve. But we thought that under this strategy of basically reducing the amount of tax credits, again from 50% of the investment or 75% down to 33 and 50%, which by the way matches it to the SITC levels in which we have had success. As Delegate Buckle was asking earlier, we've had a Hagerstown or a Cumberland company last year that qualified for SITC, that reducing the percentages allows more investors to participate in the program, as well as reducing the appropriation from 15% to 10%. It spreads out the credit to more people. Just to give you an example, in FY18, we had over 400 investors apply for the tax credit. And of those, we only had 153 based on the first come, first serve be eligible for the $12 million. And so by spreading out the credit amongst more investors, we are hoping to try and solve at least some of the problems.
And I appreciate that. And Madam Chair, if I can ask a related question. One of the other recommendations from DLS was about having Commerce coordinate with TEDCO in terms of the selection or award for the biotech tax credit. Could that possibly be a path forward in terms of if TEDCO is already choosing investments, that would help, perhaps address part of this first come, first serve, because they've already made some evaluation and determination of who they're investing in, and perhaps piggybacking off of those decisions by TEDCO could be another way forward.
Well, I do think that our relationship with TEDCO is very strong, and we do have members of our Commerce team that are specifically assigned to be that stakeholder with TEDCO. I think it's a little different when we talk about tax credits and the investments. And I think when we can certainly do that if we move to a different strategy of how to award. But at this point in time, I don't know if there is that ability to have them through the current process of the first come, first serve. But certainly not opposed to working with TEDCO, and we do every single day. And by the way, sitting on the TEDCO board, I can tell you firsthand that all of the companies that are going through the different processes, obviously they have much less companies coming through their programs than we do at the Department of Commerce, just considering the size, but always happy to work with them and to continue on with our strategies throughout the two organizations.
right, are there any other questions regarding, any questions for the secretary? There being none, thank you very much. The next bill is Senate Bill 160.
Perfect. And so I will take this one again.
Okay.
Again, just for the record, Kelly Schultz, Secretary of Maryland Department of Commerce, and I'm here today to testify in support of Senate Bill 160. And as before, you've received our written testimony. And again, I am joined by Lonnie Sinfield, who can help to address any specific question. Senate Bill 160 broadens the scope of the Cybersecurity Investment Tax Credit. And this one is SITC, as we call it, and allows investors in businesses and other innovative industries to be eligible for this credit. As just a little bit of a background, SITC was created by the General Assembly in 2013 to foster investment in early stage cybersecurity companies. While it initially provided the credit to the companies in question, it was later modified to provide the credit to the investor, mirroring the successful BITC program that we just talked about. It currently provides an income tax credit equal to 33% of an eligible investment up to $250,000. That increases to 50% in an eligible investment of up to $500,000 if the company is located, again, in the 4 counties, Allegheny, Dorchester, Garrett, and Somerset. The goal of this credit is to make qualified Maryland companies more attractive to investors, of course, and allow them to leverage SITC to raise capital in a competitive landscape. This should make Maryland more attractive to startup and early stage companies seeking to raise equity investment. However, this program has been underutilized. The changes in Senate Bill 160 will make this program a more effective economic development tool that provides broader support for Maryland's innovative industry sectors. The program may still include cybersecurity, of course, but it also opens it up to technology-based sectors such as quantum computing, aerospace, energy, agriculture, and many more that we don't even yet know about. These sectors will be based on the recommendation of the Maryland Economic Development Commission. Each technology sector would be eligible for up to 25% of the program's annual allocation, which will ensure no one industry gets a disproportionate share of the incentive funds. Finally, this bill renames the program the Innovation Investment Incentive Tax Credit and extends the life of the program to 2025 to allow time for it to be effective. This will, I'm convinced, make the program a more effective tool in Commerce's economic development toolbox. And I will just say, working with entities like TEDCO, like the university system, like the small business groups, and industry specifically, this is a program that they feel will work best for their industry. So with that, I respectfully request a favorable report on Senate Bill 160.
Thank you, Secretary Schultz. Delegate Carr has a question.
Thank you. Thank you, Madam Chair. Thank you, Secretary Schultz, for that explanation. I actually really like the direction that this bill is moving in terms of broadening it to potentially any field of technology. I guess the part that I have a question about is where the Maryland Economic Development Commission is going to be picking the sectors that would qualify. Are there other tax credits that work in a similar way? I guess, we were just talking about biotech and that we don't limit it to just particular fields of biotech. Couldn't there perhaps be other ways of, let me back up. Maybe I'm guessing that that commission would be giving particular direction in terms of sectors that would qualify in order to avoid having too many companies apply. But when I think about this, perhaps maybe there's another way forward in terms of targeting to earlier stage companies or something like that. But maybe you could explain better, what the concern is that's trying to be addressed by having the commission select the sectors within the technology field.
Well, the way that we came up with the commission and is, I think, for us, a very logical approach, because the MEDC currently develops a strategic plan for economic development for the state. That's one of their main core missions. And so with that, they come up with key industry groups. And so through the data and the information that we provide through the Department of Commerce and our other state agencies, they work with that to develop a strategic plan looking at key industries that are up and coming. So this is definitely for some of those startup companies. This is definitely for those startup industries. And then once we're able to see that they're out there, then they will certainly be added. And there is no limit on the number of industries that can be involved in this program. I just want to give an example of that, right? So Maryland has, we're known at this point in time as the quantum capital of the world. We don't have a specific program for any quantum type of specific industry, but there was just a press release that came out either yesterday or this morning from the University of Maryland College Park about a great program that they have just commoditized in order to be able to do what they did. And I'll also say that the way that this program is conceived and the way that it had been conceived with the cybersecurity is that different investors in different industries perform in different ways, and there's different timing that's needed in order to be able to move quickly with those investment dollars for each specific industry. So we want to be able to make sure that it can be as helpful as possible.
Okay. Are there any other questions? I don't see any other hands. That concludes the hearing for House Bill 160. And Secretary Schultz, you have one more bill. That is House Bill 186. Thank you.
And then you will be finished with me for the day. So again, for the record, for this segment, my name is Kelly Schultz, Secretary of the Maryland Department of Commerce, and I'm testifying in support of Senate Bill 186. And again, I am joined by Lonnie Sinfield, who will be able to answer any technical questions as needed. Senate Bill 186 extends the sunset date of the Job Creation Tax Credit Program from January 1st, 2022 to January 1st, 2027. It will also configure our underperforming Hire Our Veterans Tax Credit incentive in order to make it more effective. We do that through this bill by repealing the existing standalone tax credit and incorporating a credit for hiring veterans into the existing Job Creation Tax Credit, or JCTC. The General Assembly created this program in 2017 to encourage small businesses to hire qualified veterans. Businesses are eligible for a credit for 30% of the first $6,000 in wages paid to a qualified veteran during the veteran's first year of employment. They could claim the credit for up to 5 newly hired veterans in a given year. We at Commerce absolutely support the goal of this program and believe we should continue to support Maryland veterans. We have served and protected us for our lifetimes and beyond. And we want to be able to find a meaningful employment opportunity for them. However, the Hire Our Veterans Tax Credit has not been achieving its policy goal. In the first 2 years of the program, we only certified 9 credits totaling $21,000. We believe that we can do better by essentially folding this credit into our existing, very well-positioned JCTC program. Right now, JCTC provides a $3,000 credit for the creation of eligible jobs in the areas of the state that are not revitalization areas, and $5,000 credit for jobs created within a revitalization area. Senate Bill 160 increases that credit to $4,000 in non-revitalization areas and $6,000 in revitalization areas if the person that fills the job in question is a qualified veteran. The bill also creates a flat credit of $2,500 for businesses not otherwise eligible for JCTC that hire a qualified veteran for at least a year, which is an increase from the existing maximum credit of the Hire Our Veterans credit, which is $1,800. We believe this will simplify the program and make it more accessible for small businesses. We also believe that there is capacity within the current JCTC program limit of $4 million per year to accommodate the additional activity from the changes detailed in this bill. We believe also that Senate Bill 186 will finish the work that the General Assembly began in 2017 and allow Commerce to fully and thoroughly to the intent of that program, which was to support our community of veterans in Maryland and connect veterans who need work with good jobs. The Senate did adopt a clarifying amendment on page 6 of the bill, and Commerce is comfortable with the bill as amended. We respectfully request a favorable vote on Senate Bill 186.
Thank you, Secretary Schultz, and thank you for this bill, certainly as it supports our veterans. Are there any questions of the Secretary? I don't see any hands. All right, well, Senate Bill 186 is the last bill that is on our schedule for today. I want to thank you for joining us. And before we leave, are there any announcements from subcommittee chairs?
Madam Chair.
Delegate Eversole?
Thank you, Madam Chair. There was an early childhood subcommittee meeting scheduled for noon tomorrow. That has been postponed. There will be no early childhood subcommittee meeting tomorrow. Thank you.
All right, I don't see any other subcommittees. All right, that being said, this ends the Ways and Means hearing for today, March 25th. Okay, have a good evening.